All right, welcome. This is just pretty much going to be a dividend portfolio update on my dividend investment journey, you can say. So I started this portfolio September the 5th, 2023 of this year. I deposit on the 8th and the 23rd of every month, $100 each. So current net worth right now is $741. Previously, before I deposited yesterday, it was at $641. So let's just go ahead and get right into my investments here. Right here. Quick criticism in One Finance. I really don't like this update where everything's on the left side. It's kind of a little bit weird to me, but we digress, right? Also, if you're curious on what broker I use, it's going to be M1 Finance. Link will be in the description. It is a referral link, so I do get their what's it called? What is that called? Their M1 Plus, right? Yeah, M1 Plus. You can do your research on that, exactly what it is. But overall, I appreciate if you do use it. Moving on. So currently my portfolio is up 12.50%, which translates to $41.99. Dang near 42, right? Slowly growing this portfolio. Like I said, I started in September the 5th, 2023. If you're curious on also how much I've earned in dividends, well, here it is. We're up $1.39 in dividends from each category that I am invested in. And we'll talk about each category, of course, as well. So, yeah, pretty much just talking on my holdings right now. Before I actually do that, I appreciate 15 subscribers, greatly do. Everybody that has took the time just to subscribe to my channel, greatly appreciate you. You don't understand how much this means. This is just showing me proof of concept that somebody's enjoying my content, right? And if you haven't subscribed and you're new to the channel, go ahead and hit the subscribe button. This is just going to be me documenting my journey from zero to pretty much living off of dividends, hopefully. And a little background on me: started this portfolio when I was 18, recently turned 19, so I haven't been a full year, of course. So yeah, so recently turned 19, so you can say around that 18-19 mark I started this investment portfolio and also this YouTube channel. So yeah, if you go ahead, I appreciate everybody that has subscribed, and if you haven't, I'll greatly appreciate that too. But back to the investments now. So as you can see, I have $100 in buying power, as you saw, as the previous little thing that we just switched over from. It says $741. The $100 that I deposited yesterday has not been allocated just yet. It'll be allocated Monday coming up, and I'll just be allocated the numbers to where this $100 is going to break down into. All right, so yeah, pretty much I want to just go ahead and touch on some of the stocks that I am holding. So if you're curious on what I'm holding and this is the only reason you're here, well, here you go. I hold 17 stocks, some REITs, or one REIT, some ETFs, some industrial, some tech, so on and so forth, which I will touch on just a little bit in this video. But yeah, overall, these are all my holdings. Some things that I have done in the past that I would say I regret, but it was a learning process for me. Other than that, we're going to touch on a few things in this portfolio, and let's just get right into it. I know everybody compares their pretty much their portfolio to the S&P 500 index, which is a decent benchmark that everybody is compare their portfolio to. I also do it as well. I think it's also a decent benchmark to compare your portfolios to, and I'm gonna just show you guys really quickly on what my portfolio is compared to the S&P 500. So on the day chart, our timeline, sorry, we're up 0.29%. If we go to the day, S&P 500 is up 0.41% of making this video, right? They beat me. Congratulations, right? On the 1 week chart, 1 week chart, we're up 0.41%. I'm pretty sure they're going to beat me again just based off those numbers. Yeah, so pretty much on the 5-day chart for the S&P 500, time of making this, they're up 0.88%, right? So now in the 1 month time frame, I'm up 6.59%, and the S&P 500 on the 1 month time frame is up 5.9%. Not too bad on my part, right? And in 1 quarter, I don't think it'll be a big difference, but 12.47% I'm up right now, and they don't really have the last 3 months on here, so we're just going to go ahead and skip on to the last 6 months. So overall, when I started this portfolio, which was on September the 5th, hasn't been a full 6 months at all yet, I'm up 12.50%. So if we find the 5th of September, it's right there. The S&P 500 is up 2.39%, right? So I've done excel the S&P 500 in the last, or since I started investing, right? Next year will be a new year. We'll see how good we do compared to S&P 500, so on and so forth. So if you're here for just that piece, I appreciate you watching. If you don't mind taking the time to subscribe and leaving a comment, if you got any questions, feel free, right? Also, before I touch into each of my investments, A real estate wholesaling video will be coming out possibly one day this week. I don't really know. So subscribe, turn on post notifications, so you know when that comes out. It's pretty much going to be me talking about real estate wholesaling, how I started, when I started, where I'm at now, and my journey on that as well. Right. This channel is just about financial freedom for me, how I'm getting to it, the ups and downs, where I make money, where I lose a lot of money. This is just bringing you along with me on the journey. And if that's something you're looking for, go ahead, subscribe. I will greatly appreciate you taking the time to do that, right? All right, so now getting straight into the investment. So actually, let me go back really quickly before I touch on each and every one. M1 Finance, I have pretty much all these categories of stocks that I am invested in, so separated in slices instead of individual stocks. Getting probably 1-2% from each one, right? With M1 Finance, you get the ability to allocate categories of stocks into a percentage, and whatever that percentage is will go into those stocks, and then another percentage will break that number down and invest in the money that you do allocate. So for example, I got $100 in buying power, so let's say I use all $100. 26%, the rest of it, which is only at 22% right now, so the rest 4%, right, will go into the portfolio. So pretty much say $4 out of the $100 will go into the portfolio and be invested separately, which each one is allocated differently in this 40%, 30%, so on and so forth. All right, just a little bit of explaining on how that works. All right, this is why I use that broker. It's very easy for me, instead of doing calculations, seeing how much I need to invest, a spreadsheet and all that. It's a lot easier. So M1 Finance is the broker. I do have a referral link that you don't got to use in the description at the bottom, right? You can click on that link, use it if you want to. If not, do it on your own time. Use your own, look up m1finance.com and you'll be there, right? Or m1.com, sorry. It's one of the two, right? Don't quote me on it. So pretty much in this portfolio, we're currently up 7.67%. Translates to $5.76, which I've also earned 13 cents in dividends in this slice of the portfolio. With the ETFs, there's no really, what would you say? There's no really catastrophic things that they have done. They're ETFs, right? They're not too exciting like stocks. So with the ETFs, I don't see myself adding any more ETFs to my portfolio. These are pretty much going to be long-term holds for me. So I do get comments sometimes where they say VOO and SPY contradict themselves. Dang, they're the same ETF. Only difference is the expense ratio. Completely agree, right? I don't see the problem in holding these two, right? Maybe if I put more money into one, I get more dividend payouts. I also get more market gains, right? Overall, they both pay a different dividend. It's still dividends coming in. They both do different market gains. They're not both the exact same. Now, if they were the exact same and the only difference was the expense ratio, then I'll just do the one with the lowest expense ratio, which I think, don't quote me on it, is VOO with the lowest expense ratio. But yeah, those are ETFs, right? There's not really much to touch on with them, right? I don't plan on adding any more. If I do, you guys will know in the follow-up video. But yeah, other than that, that's really it on the ETFs. So now let's go into industrials. This is kind of, I wouldn't say it's a regret. It's a mistake. No, it wasn't a mistake. It was a learning process, right? It was a learning era, a learning time for me. So just to touch on what I'm talking about, 3M is the company I'm talking about. Back then, I don't remember which month it was. I think it was late September, to be honest with you. Can't really remember, but it was a time where they got a lawsuit for like 7-8 billion. A CFO stepped down from their pretty much, it's not CFO, COO stepped down from the position they was in into another one, or even left the company. I don't really remember exactly, but just to touch on that, that was my first ever time being involved in a stock where there was a lawsuit happening. 3M went from like $100 and some odd dollars down to $89, and I was like, man, I might sell it, right? But I went on and held it to get the learning experience, instead of being an idiot and just selling it just because it went down 20-30%, right? You got to expect that with stocks when they have turnouts like that, right? As you can see now, I stayed invested in it, but I didn't keep investing into it, which was my mistake. 3M will probably be around the $30 mark it is now, like all the other ones are now. And that was just a mistake I made. Learning process for me. That's something I want to be transparent with you guys. I don't know if you'll call it FOMO, fear of missing out, but it was something. It was emotional. Let's say it like that, right? Now that's just me learning not to put emotions into allocating my stocks, right? I didn't have enough emotion to sell it, so I had enough emotion, emotion to what's it called, allocate it to a lower extent. I think 3M previously was at like 15%. I upped it from 5%. Now it's at 8%, and I may up it sooner or later when it goes down just a little bit more. But yeah, overall, that's how I feel about 3M. The process that I went through with that one stock, how I've learned from it, and how I will take that into account when something else happens to another stock in my portfolio. All right, we digress. We move on. Right. So, as you can see right now, waste management is 40% allocated to my portfolio right now. That might not stay long. I did that recently in between the weeks. I haven't invested anything since the 23rd of last month. I made that decision one day last week to up it to 40%. And the reason is to make it the anchor of my portfolio, because I don't think waste management can really go wrong, right? I think it's just another blue chip company. Everybody has waste management and near them. You need your trash picked up if you don't do it yourself. And if you do it yourself, you got to pay a dump fee. And that's even more money for them, right? But other than that, I won't be putting 40% in it, possibly. Just checking out the numbers. I'm just looking at the percentage at 14%, right? It's not really too high, but that is decent gains, right? But yeah, just got to do the numbers, work them out, see what's up. And other than that, that's really it with waste management. Just to touch on these two quickly, Caterpillar and Lockheed Martin. I deal with a lot of Caterpillar products, excavators, front loaders, engines, you name it. I deal in it. The reason I deal in it is because I'm a freight agent and I move loads from one place to another. And sometimes I move heavy haul, which is the category it's called, heavy haul or oversized equipment. Not for Caterpillar, but Caterpillar brands, and pretty much get reference on how people like the Caterpillar brands, of course. And then I'm the person that does the fundamentals on the background of Caterpillar. So that's the reason I'm holding Caterpillar. Lockheed Martin, a little bit of a political play to me. I feel like depending on the president, we may have a lot more higher market gains, giving Lockheed Martin a lot more revenue because not country defense, but the defense of this country is Lockheed Martin is one of them. I think personally that's the best one to. Let me not say the best one. There are other decent ones out there, but I think for me, I think Lockheed Martin is pretty much the best investment for me, and that fits my risk tolerance. Other than that, that's why I'm investing in Lockheed Martin. We go ahead and move on. I don't know if I said the percentages or not, but I'm up 8.93%, which translates to $6.39. And just in case if I didn't show the dividends already, here they are. This is how much I've earned in dividends from each company. Okay, and we move on. All right. If you got any questions, right, on some stocks that I am holding, put them in the comments. I'll answer it right away. And if I don't know the answer to it, I'll figure it out. Right. I'm here to learn. I'm here for the criticism. If you see something that's just straight like, why are you invested in that? Tell me. Right. I don't want you to hold back. I take criticism lightly. Right. I don't let it affect me, but I do take it into account when I am doing whatever I am doing. But yeah, other than that, I think that's really it on the industrials and stuff like that. And yeah, moving on to tech. Quick background: I was holding QQQ at the time as an ETF. It's pretty much a tech ETF, right? We all know, or if you knew, pretty much 48 or 50% of their holdings is straight tech. I don't hold much tech. The reason is I think it's a little too volatile for me right now. The only other tech one that I'm currently looking at investing, and if you're curious on what is in the tech, there it goes right there before we look at the numbers real quick. But only other tech I'm looking at, right, is possibly Amazon, right? The tech side of Amazon, of course, I think that's pretty much a really big side on Amazon's part. Now I'm not really looking at the delivery services. I think that's just extra income, and it provides a convenience, right? That's even better for a company like that. But that's pretty much the only other tech that I may be looking at. But right now, these are the techs I'm invested in. If you looked at my last video, I was talking about the dilemma of reinvesting in the tech category because I was up like around the bracket of 20 and 30% on each of these stocks. The Apple, Intuit, Microsoft, and I was curious on how it would affect my investments. here we are in the future now. I don't think it affected my investments too much. All three of these companies, I think they're very long-term holds. They're all blue chips. These are not really here for the dividend payout because they don't really pay too much in dividends. And I'm not really here for the market gain neither because I'm not going to be selling it. My main game plan for these stocks is pretty much, yes, the dividends are going to be a extra help. Appreciate those, reinvest those, so on and so forth, right? But it's really to anchor down my portfolio pretty much so it could beat the S&P 500 index, right? So that's why I said 50% right now. I may up it, but the only reason I won't up it is because, as high as tech can go, it can go even lower, right? But yeah, pretty much these companies I'm very happy on holding. These are most definitely going to be for the long term. The numbers really quickly, I'm up 15.71%, which translates to $8 flat that I'm up in this slice of the portfolio. And if you're curious on how much dividends I've earned, well, here it is. All right, not much, not a lot, just proof of concept in my eyes, but slowly and surely will grow to $50, $5, $100 from each stock, right? But that will take a lot of time and a lot of money, okay? We move on, right? So that's our tech side. 3 more to go, consumer, all right? Now, in our consumer, we don't hold much. We only hold 2 stocks. If you check out some of my previous videos, what's it called? I was thinking about adding Tractor Supply. I think Tractor Supply is a pretty decent company, right? But I think the 2 that I have now are pretty much have their moat in a pretty much, I won't say wrong choice of words, but their moat in a chokehold or have it held down, anchored down, right? With Costco, I think it's a great company. Same thing with Home Depot. I think they're both great companies. They handle on everything that they can provide. Home Depot does the building materials for houses, facilities. If you need to fix something, you can just go to Home Depot, right? And I go to Home Depot and I have about 2 Lowe's within 15 miles of each other. Probably a lot less than that, but every time I need something to fix, I don't go to Lowe's, I go to Home Depot because I feel like that's where I can get the best price. That's where I get the best customer service. And I don't think Lowe's would get too far into Home Depot's mode looking from now in the future, right? Of course, Lowe's is growing. I don't really think they're going to be growing faster than Home Depot. If they do, hey, Home Depot, skedaddle, Lowe's will add you, right? If I see a better investment that I can go into, I'll most definitely do it. But other than that, these are my 2 holdings. And then with Costco, just to touch on that a little bit, I think Costco is going to be a great holding. They pretty much know their customer acquisition price down to the person, down to the building. If they wanted to make one in a certain area, it's pretty much just a really great company, and they're just going to continue to grow grow revenue, grow free cash flow, and pay out a pretty decent dividend. All right, and I don't know if I already showed dividends. I'm pretty sure I did, but here it goes one more time, the dividend that they are paying that I have made recently. All right, so we move on. I don't know why I want to keep saying we digress, but for some reason I want to. But we're going to keep moving on. All right, finance. Now, this one I'm having a little bit of dilemma on, just to touch on it. So I'm up 12.7%, translates to $7.14. And in earned dividends, I've earned this much, 15 cents in total from each company, right? So I'm having a little bit of a dilemma with the finance slice of the stocks, just to get the 2 out the way. S&P Global, MasterCard, long-term holds, no issues in those. I feel like they have a great moat. They're gonna settle down, lock in profits. I know MasterCard recently upped their dividend to from whatever it was previously to 69 cents, and then S&P Global is just growing their revenue year by year, right, or quarter by quarter, we could say, right. Now the 2 I'm having a dilemma with, American Express and JP Morgan. Those 2 right now, I'm having a little bit of a dilemma on, do I lower the allocation? And the reason I'm having a little bit of, not scarcity, but I'm going to keep using the word dilemma. Problems, dilemma, whichever word you see fits better, right? With those 2 stocks, is kind of their fundamentals. Free cash flow, revenue, and free cash flow compared to stock-based comp, I think it's called. And then what's not the expense ratio. There's one more ratio in there that I'm thinking of, but I can't. It's on the tip of my tongue right now. If I remember, I'll say it. But looking at these companies now, I might just lower the allocation. If I was to do something, it will kind of be a little dramatic. I don't think I will do it, but I may. This is like 10 out of 100% that may happen, but I may switch them out for Visa. So sell American Express and JP Morgan for Visa. Right now, Visa is kind of looking like a decent investment. It won't be anytime soon because I think Visa's current stock price is a little high. I want to get it a little bit lower, right? I don't want to be at the bottom, of course, right? That's never gonna happen. But I don't want to wait too long and it goes up 10% more from where it's at, right? But yeah, pretty much that's kind of the dilemma I'm having right now. Looking at their numbers again, looking at their future gains. What's it called, and future free cash flows. Is the dividend going to be sustainable, so on and so forth, right? Because that's what I'm kind of here for. Mainly every single stock in this portfolio is a dividend payer. It may not be a large amount. I'm really here just to grow the portfolio slowly and surely. Over the years I may be living off the portfolio, right? And there may be stocks I do add that help with the portfolio growth. All right, but that's pretty much it with the finance stocks. No, and that's pretty much the only dilemma I'm kind of having, right? All right, last but not least, my REIT, Real Estate Investment Trust, currently up 8.37%, translates to $4.75. I have not earned any dividends from this company just yet, but when that dividend does come in, it's going to look pretty nice. I think that's going to be my first dollar dividend, right? I don't know. I can't remember how much they pay. I don't know if it's over 50 cents. For Vici, which is the only REIT that I'm investing in right now. But if you're curious on how much I hold 2.4 shares. My current share price, our average share price, is going to be $28.60. The current share price is $30.51, right? You may ask, why did I not add Realty Income? I think I pronounced it right this time. Stock ticker O, pretty much. I just thought Vici was a better holding for me, just based off the real estate they do hold, which is Las Vegas real estate. And now since they added F1 to Las Vegas, that even makes their investments more, or their real estate that they're invested in more valuable. Because Las Vegas is that place where it literally, instead of a name Las Vegas, it will literally just be fun, right? You got gambling there. Not too much of a gambler myself. Maybe I'll go there once in a casino and test it out for myself. But what's it called? Yeah. So pretty much just touching on that a little bit more. Yeah. The real estate they're invested in can't be copied. It can't be moved. They got contracts with pretty much the person that they're renting out to or leasing to. You can call it. They got contracts that are able to up rent even in bad situations like COVID. Go past that interest rate, right, that we currently are at. I think it's like 7 or 8% right now. So, but I think interest rate won't affect Vici too much. Not as much as other REITs, let me say it like that. It will affect it, but not as much as other REITs in my eyes. But other than that, Vici is going to be one of my top real estate holdings. The only other one that I'm looking to possibly add is Realty Income, just not at the price it's at right now. But overall, that's pretty much my investments right now. One thing I do want to touch on, you may say, okay, you got $75 in your REIT. Isn't that your biggest holding? Not technically, because since I do have my portfolio separated in slices, not the individual stock themselves, getting like 5% on each, right? So pretty much it's based off the categories that they're in. So dividend ETFs are my current top holdings because there's 22% in it right now, but total is going to be 26% once I do reallocate that $100 and start investing that $100 into my portfolio. I will be doing some research on some stocks. I may not reinvest that full $100 into every single one of my stocks because the buying price that they're at currently right now isn't too favorable in my eyes, right? But yeah, overall, that's pretty much it on my portfolio. My top holdings right now are my ETFs, just going based off the percentages. $144 is into my ETF portfolio, and sorry about that, a little alarm went off. But yeah, I appreciate you guys for watching. If you're not subscribed, please consider subscribing. If you made it this far, of course, like I said again, I appreciate all 15 other subscribers that have joined my, I guess you can say, community or enjoy my content. I really do appreciate that. And yeah, if you got any questions for me, any criticism for me, like I said, put it in the comments. I don't mind it. I will take it to an account. And then, yeah, and if you made it this far, just a little bit of heads up. I will be posting a real estate wholesaling video on this channel. Just pretty much talking about my journey, how I started, where I'm at currently, and yeah, that's the game plan. I don't know when it's going to be posted, but turn on post notifications, subscribe, and turn on post notifications so you don't miss that video. You may learn a little bit of something from me, maybe not, don't know. Hey, extra information doesn't really ever hurt, right? But yeah, I'll see you boys in the next video. Next video, if you are new again and you made it this far, next video will probably be on the 24th of this month. And yeah, I'll see y'all boys in the next one. Hope y'all enjoyed. Peace out.